Perfect. So let's talk about the previous video a little bit and how it applies to the live market right here. And I think if you have studied the video a little bit, you can already see an example right here. Now, if we take a look at the dollar, then on the dollar, what we see is a retracement towards this value gap. Eventually we continue lower. We have the fast price action right there in that gray box. And then once that fast price action is gone and we reach that first discount array again in the form of that low right there, we do not run the low, we sweep the low. And again, is it a confirmed sweep? No, I would argue at this point in time, it's still not a confirmed sweep, but it's very suspicious. And what I'm trying to get your mind at is when you are then trying to take a trade off of this fair value gap, off of that order block right there, that's not necessarily a great trade initially, because we have both bullish hands and bearish hands pushing that price action into somewhat of a consolidation, somewhat of a balance, at least also very bullish price action right there. So the typical confirmation is usually not going to be enough right there, because you need more confirmation in that sense. You want more confirmation because we have a lot of bullish intention going into a bearish pre-array. Again, the analogy I always like to use is I like to look at, it's trying to stop a train right there with your bare hands all of a sudden. But it doesn't make any sense, right? So this also doesn't make any sense if we try to stop this bullish intention right there with our bare hands with the minimal confirmation. That's not enough. And that's why it's so important to read those respect of those candles and what we can expect, how far the retracement can be off of that as well. So we mentioned this during the forecast last night as well, which if you're watching the spring roll, you don't necessarily have to watch. I just mentioned it right here to go over the full thought process. And during the forecast, we were sitting right there. And when we see something like this in itself is already extremely suspicious. There should be so many alarm bells ringing right now where there's two thought processes going through my mind. If we want to continue lower, then this rejection that we have, which could be a sweep of liquidity, is not a great rejection. That is not what you would want to see. If we want to continue lower, we should have comfortably closed below that low right there, at least with the next candle, trade below it again, and then continue lower off that, actually running the liquidity to continue lower. Now, eventually, what happens is this does not get any better. Now we trade into those fair value gaps, and those fair value gaps, after a sign of respect that we might be sweeping that leads me back to a very similar example where leads me back to Australian dollar, US dollar right here, where this is also, once we are sweeping this low, or at least having signs that we might want to sweep this, I do not want to trade off of this order block. That doesn't make any sense in my mind, because that is a lot of intention that is coming into the market to then all of a sudden expect this to follow through all the way right there. That is not what I want to look at. So we can expect a rejection just like we saw on the dollar right there, but for it to follow through, that is quite low probability in my opinion. Now, why does this even happen in the first place? Why are we not following through on both sides of the market? This is eventually where we are going to combine timeframes. So what are we now actually retracing towards? Well, what are we doing on a time frame above the daily right here? We are creating a weekly fair value gap right there. This is not a topic we have gone in just yet, but just as a general rule of thumb, the third candle off of every fair value gap that is being created is 50-50. It can be consolidation, it can be an expansion, it can retrace, it can do whatever it wants to. The expansion candle that we have right there is the highest probability candle to trade. The third candle right there is lower probability automatically, because if this wants to create a weekly fair value gap, wants to sting back into that, because price is already, the way price works is ideally price wants to keep the fair value intact, meaning it doesn't want to leave behind all those fair value gaps. So what does it tend to do? It already retraces, or it already retraces in the next candle right there, consolidates to have an easy setup on the next candle to trade back into it, to then continue lower off of that. So that is oftentimes what you'll see. Now, if that happens on a weekly time frame, then you have a weekly consolidation. So that is something that we need to take into account, of course. And how can we see that? By early signs that we might actually consolidate on timeframes below that. So on the daily, do we have signs that we are consolidating here? Well, currently, yes. I would argue right now that the target is not at the lows. The target might be at the highs right there for the dollar. So on the 4 hour, let's see. On the 4 hour, what do we see? On the 4 hour, we have this sign right there that we might want to consolidate. Because if we actually wanted to confidently move lower right there, this should not have happened right there. So that, again, what I'm trying to train your mind at is right there. That should be extremely suspicious to you. That should be very suspicious, and you should be very careful trying to trade off of these order blocks right there. So if anything, right now, we had this last line of defense right there failing, which was this candle. If we still swept that candle during news, wouldn't have been too crazy to me. But now we are, again, comfortable above that high, where in my opinion, next target would be those highs right there. And then the last line of defense actually is not something I would want to trade off of. It's actually the target in this case. So we'll see how that plays out. But that is, overall, it's a beautiful example of what we've been talking about as well. So that is very nice. I am talking, yes. Not too sure why that might be. Could be audio settings. Could be, So let's see. Let's look at some other pairs as well, which of course reflects as well on Australian dollar, US dollar, on Euro, US dollar right there as well. We have big rejections, which is all seen by initially just the dollar. The dollar sweeping that low instead of running that low, which is just extremely suspicious. I would not want to see that. That is just very, very suspicious. Let's see if we have some more examples as well to look at right there. By the way, nice price action on crude oil overall. Very interesting price action. Did not catch the move currently. Might still someone catch the move if we create a 4 hour value gap right there. Could be interesting still. Let's see. US dollar, Canadian dollar. Quite similar price action compared to the dollar itself. Also that low right there. That is just not ideal. It's just not ideal where we will mess around in that premium rate right there. Eventually, can we continue lower? We might, but it's just not the highest probability anymore. Let's see if there aren't any questions for this particular section as well, then we'll move on to the more advanced live section. And then I'll go over the DOM trading question as well. Let's see, ES. Very similar scenario right here on ES. That is also just suspicious. That ideally should not happen right there. We do want to continue higher. You've already respected right there. That is just quite suspicious. I do not like that. Do not like that. Let's see, could you speak about Australian dollar, US dollar in detail? Yes. I'll go over it in spring enrollment detail right here. So just everything we've learned so far. After that, we can also go into extra details. But right here on the daily, we have come into that daily fair value area. Overall, we get a beautiful rejection. Then right there, we get a nice up candle. Now, where it gets suspicious already is this rejection a little bit right there. That's a bit suspicious. In the previous spring enrollment video, I mentioned I do not necessarily want to see any big retracement anymore. Now, that is also understanding that if we do get a big retracement, that is suspicious. And that is ideally where we want to switch our bias potentially to continue lower instead. Because big retracements should not happen anymore. So right here on the 1 hour, I was showing the 1 hour on the spring enrollment video, which, yes, the 1 hour, but we created a 4 hour value gap. So the 4 hour value gap right there is perfectly fine to then look to continue higher off of. Now right here, we already have a rejection higher actually. So this rejection higher right there is perfect. That's perfect. And we can just look to continue higher off of that as well. But once we then take out this low, that becomes again suspicious, where we have already had the rejection. Why are we now continuing lower? Which is all in alignment with the overall picture becomes a lot clearer if we understand the dollar as well. That's why we are seeing a retracement on Australian dollar, US dollar. That's why we're seeing a rejection in the first place, because it's understanding what the dollar is doing at that moment in time. But right here, if we do want to still continue higher, we have very similar to the dollar, the overlapping defense right there, which we can see, well, that is not a great initial rejection right there, I would argue. But eventually we just end up in somewhat of a consolidation as well. So that would be my thought process, which is perfect in alignment with the dollar. So if you want to get an earlier understanding as well, then the dollar is the go-to, if that makes sense. Yeah, the big retracement right there is mainly seen through the dollar as well. Now this news wick can be somewhat ignored as well. So then the big retracement is coming from this fair value gap right there. And the reason I state that is because this news wick, it really depends on what time frame you're looking at, but overall, general rule of thumb, news wicks on both sides of the market right there, there hasn't been actual trading at those news wicks. So there's not actual liquidity right there. So the way I see it is I ignore those wicks. Those wicks are not there for me in a sense. So then what I look at is I look at the things we have to the left right there, because the first time we did not actually trade into that fair value gap. We only traded into that fair value gap the second time around right there. It's the same for the overall fair value gap fair value area that we had sitting right there as well, if that makes sense. Let's see. Can you talk a little bit more about fair value area? If higher time frame has a fair value area and lower time frame has a closer or lower fair value area, which one should be the one to focus on, or each to their own for their respective time frame? Yeah, it really depends on the overall situation. If we are talking about a situation like this, for example, on the daily, then if we work our way down from the monthly, weekly, daily, then the fair value area that is on the highest time frame right there, that's the one I want to work with. That's also the one I want to stop at, essentially. And then work my way around that fair value area. Regarding yesterday's video and the idea of not relying in the movements that happen on a no news day, how can we analyze crosses where there are no news in the whole week? Well, crosses where there's no news throughout the whole week is not tradable for me. So that is quite a simple answer for me, as in I don't trade crosses if they don't have news. It's the same for the dollar. If they don't have news, I don't trade them because they are less reliable. They are lower probability. So that's why I don't trade them. Good morning. Okay, check this. If this is correct, I was practicing unusual context. Correct me if I'm wrong. So I'm confident that I got unusual context, and that would be the target if I'm correct. Let's see. Unusual context. Expecting disrespect for value gap. Yeah, that's good. That is good. I like that. Yeah, that is good. That's very good. Nice. I like it. I was a little late joining live. Did you go over NQ yet? No, not yet. Not yet. Let's see. Keep the dollar in focus. Yeah, it's all things we haven't gone over just yet as well. So no worries. It's about that. As in, I still need to go over dollar, etc. How to correlate that. But these lives gives already some future insights in that sense as well. You are correct, Abby. Yes, you are correct. That is indeed correct. I like that. That's very good. Unusual context. For sure. I like that. I mean, if we have news the following week, our forecast will be based on no news candles. Okay. Yes, that is a good one. That is a good question. So in that case, what I would want to wait for is essentially, well, not necessarily a new day to close where we have news, but if we are already respecting one of those, then I would need more context on the 4 hour, for example, 4 hour for value gap, seeing how we respect that on that news day itself. So that's a good question, actually, where if we don't have news supporting the ID on the previous week, but then the next week we open up and we are already respecting something, for example, and how do we go about that? I would then need to go into the 4 hour instead, so a little bit lower time frame confirmation if we have fair value gaps, seeing how we react off of those fair value gaps with news supporting the ID instead. So it's being more careful, essentially, if that makes sense. That's a really good question, actually. I didn't understand it the first time around. Let's see, in the dollar, price is not following through daily flat. If price moves higher towards the O lot or deep rotation, what makes this PA low probability? Can you list out all arguments? Yes, for sure. So I think this price action being low probability is already, it can be told quite early on. And that's why I like to retrace those steps all the way back towards, well, the earliest sign we can get that it might be low probability. Now, at this moment in time, I think that, or I believe right here, that in a sense, it was already a little bit lower probability right here once we continued lower off of that fair value gap. Not necessarily because we didn't follow through nicely. It was just the way we reacted right there on the 1 hour, which I did not necessarily like. Now, eventually we did follow through. All right, perfect. We did follow through. Not a perfect follow through though. So it was already a little bit of a consolidation to follow through. It was already a little bit of a struggle to follow through. And after that, we also do not create a new fair value gap here on the 1 hour to follow through towards those lows right there. Already, again, a little bit suspicious. So then the next thing, which all these things before that is, all right, I can live with it if we still run that liquidity right there. If we sweep that liquidity, then it becomes suspicious. So right here, when it is again suspicious, is that we now have this sweep on liquidity, which on the 1 hour is earlier seen by this down candle right there. And then as soon as we now have this up candle right here, that becomes suspicious. Now it becomes almost, I would argue, low probability confirmed, where definitely the 4 hour right here, the 4 hour to trade off of that, I would not necessarily want to trade off that. That becomes low probability for me. And the reason for that is because, and if you're listening to Spring Enrollment Extra Live, this is already a little bit more advanced. So if it's a bit confusing, don't worry. It's supposed to be. It's meant to be because it is already a little bit more advanced. But at this moment in time, there's two things going through my mind. If we want to continue lower right now, then I would ideally already want to see lower prices just straight away right here. On the 1 hour, I would not want to see a retracement back into that 4 hour value gap. That 4 hour value gap is too big of a retracement to make, because if we make that retracement, then that almost confirms it that this is a sweep. So that automatically says, I do not want to trade off of that, because if we trade off of that, then we also assume that this is a sweep on liquidity. So then we're trading a sweep on liquidity in the form of a premium array. That doesn't make any sense. So you're either looking to target lower, and if we're looking to target lower, then right here, we create a 1 hour value gap, which is already adds on to the overall list of arguments that we have been creating. So what do we do after that? We create, at this moment in time, another up candle. And every up candle is just another sting into that argument that this might be a sweep. As soon as we do not come below this low again, which would argue, all right, now we're getting comfortable below that low, that then is just extremely suspicious that we do want to continue higher. And then now this move higher is a sharp turn below that sweep to then move higher right there, the read to continue higher. This is, again, that is then even lower probability to now look for a trade off of this right there. So the whole thought process can be retraced by just having this singular candle right there. And then once we trade back above this line inside that next 1 hour candle, that should already ring alarm bells. Does not necessarily mean, because this sometimes will happen and we will just continue lower right there. But we can retrace those steps as early as possible to see if it is already potentially low probability. Because I would argue, if we are not coming below that low right there again, any trades off of this 4 hour value gap is already low probability. Because if we are trading that and we are assuming that big of retracement is going to happen, that doesn't make any sense, because then you are trading a sweep on liquidity with a big retracement, which if we have a sweep on liquidity, then there is going to be a big retracement. So that is very a counter argument, if that makes sense. Let me see. I will go over that, Lorenzo, in a little bit. For Toulon as well, we'll go over that as well. And for Dama, we'll go over that as well. Yeah, after this. Let me see. Abby, I will go over this right now. Is there a cheat code where we can get to know that this can be swept if we are in a trade? As this happens regularly. After that, the target is hit. Let me see. Not necessarily a cheat code. The only thing we can look at is, again, well, we already come into that 1 hour fair value gap. I would argue that that right there is more so unlucky. What we can do in that sense is if you pay attention to the 1 hour right there, then the 1 hour candles, let me show you. So if it happens regularly, this is how I would approach it personally. I would want to be more careful. So if we're trading off of this 1 hour value gap right there, we come into it the first time around, we might take a 50-minute ST entry right there and covering that high right there to then target lower. Perfect. We might get swept before it moves lower. So how do we approach this? Well, this is where we want to see everything in perfect alignment. And what I mean by that is when we sting into that fair value gap right there, and that could be an entry in itself, what do we want to view? We want to, well, what do we want to see? We want to see every candle right now should be a new fair value gap, ideally continuing lower. So it should be a new expansion phase continuing lower. So what I mean by that is that can be seen on the 50-minute, but on the 1 hour, that's also very interesting. Where right here, once we open with that new candle, this candle doesn't really have a reason to come back into that first candle low right there. If it does, that can already be suspicious where you would already want to go break even. I would argue if this was your entry, I'm not too sure what the entry exactly was, but if that was the entry right there, this already can be a break even right here because there's no reason to return anymore. We should demand right there that there should be a fair value gap lower being created at this moment in time. There's no real reason to trade back into this line right there, which is the first candle low on the 1 hour. If I do it like this, like that, because now we should ideally create somewhat of a fair value gap lower right there. On the 15-minute, we are already above that entry right there. So this can already be a break even, if that makes sense. So is there a cheat code to view if we will sweep that? That can again be told by the signs that we are having, not creating 1 hour, 50 minutes fair value gaps lower right there. If we're in the trade, I would argue break even quite early. You can go, we'll go over this as well, very in depth in Spring and Rolled as well. But people underestimate how early you can actually go break even. All right, perfect.